Let's take a real example that you may have heard of, Bitcoin. That's the most popular cryptocurrency, and it is a digital asset that has been described by many as digital gold. There are no physical objects that you could point to and say, that's Bitcoin. Bitcoin exists on something called the blockchain. And this is a very important part to understand about how most crypto works. The blockchain is a massive record of all the transactions that have been made. Let's say you had Bitcoin, and we're assuming for this scenario that you knew how to get it. If you had Bitcoin and wanted to buy my couch, then I might say, that's going to be 1 Bitcoin, please. Assuming you agree to this transaction, you would transfer a Bitcoin from your account, which is called a wallet, to my account or my wallet. Now, how does your wallet know that it must subtract 1 Bitcoin from your account? And how does my wallet know that it needs to add 1 Bitcoin to my account? Someone needs to keep a record. Well, with Bitcoin and many other cryptocurrencies, those records are kept by everyone. Instead of one bank or other specific company or organization holding all of the records of transactions, you have those transactions being logged and verified by anyone that wants to. These people that keep track of these transactions use computing power to verify and then log a transaction to the blockchain. When this happens, they are rewarded with a small piece of Bitcoin. You may have heard of Bitcoin miners. This activity is called mining because every time these transactions take place, more Bitcoin is put into circulation. But Bitcoin mining is programmed to get a little bit more difficult each time because unlike physical gold, everyone knows where to get this digital gold. This design makes it so Bitcoin is made available slowly. And if Bitcoin is like digital gold and a single organization mined it all up really quickly, that would be bad. That organization would control all of Bitcoin and could manipulate the price. And to be honest, that still happens to some extent. Bitcoin has become so popular in the past 5 years that banks are now beginning to buy up a lot of it. This reduces the amount in supply and causes the price to go up. But just like traditional stocks, now that Bitcoin has so many people trading it, it's susceptible to emotions. When a lot of people sell because of something they read on the news, it floods trading platforms with a lot of supply and the price can nosedive. Cryptocurrency prices tend to swing violently up and down. This can make it a dangerous investment for those who are used to longer market cycles or are not used to investment at all. Crypto is like the Wild West of investments, and if you're living paycheck to paycheck, it's not going to make you a millionaire. With that said, the price drops we are seeing lately are not typical. Usually, if the stock market is not doing well, actual gold does well. Cryptocurrency was following the same pattern for a long time. And if I'm not mistaken, this is the first time, these past couple of weeks, that both the stock market and the crypto market dipped simultaneously.